maybe something happens over the next several months leading up to the election. And I hope not, but I have a hard time believing something won't that will wake people up in a way to where they maybe look to silver. And you reignite the investment demand in this country, and well, maybe all bets are off. But I guess what I'm trying to say is that, first of all, to your question, yes, I'm seeing premiums go up on bars. Not so much on the sovereign mint coins yet, but the bars have gone up a bit. I have no proof to say that industrials are buying and melting down bars. I'm not sure where he heard that. I haven't seen it, but I do think all of these things put in context with what Vince has been talking about, what the Chinese are doing, net importing, not exporting, and buying up unrefined silver, because part of the reason they buy up all the concentrate unrefined silver, it allows them to accumulate tremendous amounts, even if the cost is uneconomical in relation to what the market bears. The problem here is that she just doesn't understand what the hell she's talking about, in the respect that she's stepping on the gas of inflation, and at the same time, instead of blaming the real cause of inflation, which, as Milton Friedman would have said if we kept playing, I'm sure somewhere in those videos he would say that each and every time inflation is a monetary event, period, meaning it is an increase in the money supply. What she is doing is showing how stupid she is by blaming the effect of inflation on inflation. In other words, it is the increase or the inflating of the money supply that creates inflation. And that is each and every time, as he says, a monetary event. It is not greedy. And she doesn't even know how to say it. She said it last night, price gauging. It's price gouging, and they're not gouging anything. The cost for farmers to produce the food has gone up. All of the inputs, the diesel fuel to run the combines, the cost of seed, the cost of fertilizer, most of which comes from Russia, all of the inputs cost more. And so it costs the farmer more, it costs the trucking companies more, it costs the flour mills more, it costs everyone more, it costs more money for packaging. She's blaming shrinkflation that's coming out of the manufacturers and the producers on the grocery stores. It's gross, it's stupid, and it goes to show how dumb she is and how dumb the public is. The consumer price index is not a measurement of inflation. It's a poor one. It's a measurement of rising price inflation. Measurement of inflation would have been M3, which they got rid of a long time ago, which was the broadest measure of the money supply. They cited it as being archaic number no one looked at. Yeah, right. So if we don't know how much money is being pumped into the system or inflating the money supply, then we really don't understand inflation as well. There can be other factors that lead into price inflation, such as the supply chain issue. Suffice it to say, this will end poorly. And when you cap prices, you disincentivize the producers to produce. If you have a product that you're bringing to the market and it's capped, well, if the cost to bring that product to the market is such that you make no profit or such a small profit that it's not worth the headache, you'll just stop doing it. And that's what happens. It leads to empty grocery store shelves. When you intervene in the free market enterprise system that she wants to do here, you just create other distortions. But none of this addresses the real fact or the real problem. And the real problem is that we're creating $100,000 of debt per second, 24/7. That is the fact. We are a country that is a junkie, spending. We're like a junkie who's addicted to spending and can't get off it and won't stop no matter what. And that's the real problem. And going around and blaming the grocery store chains as being greedy is the dumbest thing I've ever heard. When you're looking at the lowest margin business that there is, and they're greedy. No, it's the government that is greedy. It is the government who has created a handout system where the continual, complete and total irresponsible fiscal policy of this government is the root cause of inflation and the monetary idiocy of the Federal Reserve. And to blame it on people like the grocery store owners is one of the most grotesque things, and really just goes to show that she's stupid. And she does not know what the hell she's talking about. Maybe this is why they keep her from speaking, because when she does, she just ends up saying dumb things. And what's equally as disturbing to me, Chris, is the fact that the public is collectively naive and buys this nonsense. No one studies anymore. No one researches anymore. No one does due diligence anymore. Just take Kamala at her face value. Take her at her word. She must know what she's talking about. But in essence, Milton Friedman would have been a far better president than what we have right now, just based on his understanding of the way markets work. And when you mess with free markets, when you intervene, a la Keynesian economics instead of his way of thinking of things, Austrian economics, a system based on investment, savings, and reinvestment, you end up creating distortions that go.
The problem we face today is not just about rising prices or inflation. It's about a fundamental misunderstanding, or perhaps deliberate obfuscation, of what actually drives inflation. When people like Vice President Kamala Harris point fingers at grocery stores and accuse them of price gouging, they miss or ignore the real issue. As Milton Friedman famously said, inflation is always and everywhere a monetary phenomenon. In other words, inflation is not about greedy corporations or supply chain issues. It's about an increase in the money supply. Every time the government pumps more money into the economy, it dilutes the value of the currency. And that, my friends, is what leads to rising prices. Let's break this down. The government has been printing money at an unprecedented rate, to the tune of $100,000 per second. Yes, you heard that right. $100,000 every single second. That's more than $8.6 billion a day. This constant inflating of the money supply is what's driving inflation, not some imaginary price gouging conspiracy among grocery stores. To put this in perspective, think about how the dollar has lost purchasing power over the years. $1 in 1970 could buy you a lot more than it can today, and that's not just because prices have gone up. It's because the value of the dollar has gone down. The more dollars the government prints, the less each dollar is worth. It's like watering down a glass of orange juice. The more water you add, the less flavor the juice has. In the same way, the more money the government prints, the less valuable each dollar becomes. And here's where the conversation gets even more interesting. While the general public might be led to believe that inflation is caused by corporate greed, the reality is that the government is the biggest culprit. Their reckless fiscal policies, coupled with the Federal Reserve's monetary policies, have created a perfect storm of economic instability. And what's the solution being proposed by the very same government officials who created this mess? More government intervention, of course. But this kind of intervention only leads to more distortions in the market. Take, for example, price controls. When the government imposes caps on prices, it doesn't solve the problem. It makes it worse. If the cost to produce a product is higher than the capped price, producers simply stop making that product. This leads to shortages, which we've seen time and again in countries that have tried to control prices. It's basic economics. When you disincentivize production, supply decreases, and the shelves go empty. This isn't just theoretical, it's historical. Consider the 1970s in the United States, when the government imposed price controls on gasoline. What happened? Long lines at gas stations, shortages, and frustration for the average consumer. People couldn't get gas not because there wasn't any, but because the price controls disrupted the supply chain. The same principle applies to food, housing, and other essential goods. So, what does all of this mean for you? It means that holding your wealth in the form of fiat currency is becoming increasingly dangerous. The value of the dollar is eroding every day, and the government shows no signs of stopping its reckless spending. But there is a way to protect yourself by holding real assets like gold and silver. Gold and silver are not just commodities, they are stores of value that have stood the test of time. Unlike fiat currencies, which can be printed out of thin air, gold and silver are finite resources. They cannot be created at will, which is why they have retained their value for thousands of years. In times of economic uncertainty, these precious metals act as a hedge against inflation and a safe haven for your wealth. So take control of your financial future. Start accumulating gold and silver today, stay informed, and be prepared for the changes that are coming. The future belongs to those who are ready, and those who hold real, tangible assets will be the ones who come out on top. And let's not forget, in times of economic crisis, those who are prepared are not only protecting themselves, but are also in a position to help others. Whether it's providing for your family or contributing to your community, holding real assets like gold and silver is a way to ensure that you're ready for whatever comes next.
Yeah, I have seen premiums on bars go higher. That is true. I can't speak to the melting down of retail products to meet industrial demand. I haven't heard that. Ultimately, wouldn't surprise me. When you see things like China being the second largest producer of silver in the world and is now shifted to a net importer. They were always exporting silver largely because of their byproduct availability. They had so much in terms of their smelting and the byproduct of other metals that they had the ability to export. They're now net importers. You put that in context with what Vince was talking about on them flying around to the Latin American companies buying all their doré and their silver concentrate at a much higher price in the West and refining it back home. These are things that will happen. You can see that supply is becoming much more difficult. And the reason it will catch everyone by surprise, Chris, is because this is all being done in a way that people don't see. If we have to be melting things down to appease industrial demand, if the Chinese, who were net exporters, are now net importers as the second largest producer in the world, if they're going around and buying unrefined silver, none of this ends up on the TV screen. None of this ends up on people's radar. God bless guys like you and Vince who help bring this all, to the public, the small subsection of America that's paying attention. But this is why one of these days you wake up and it's a whole new thing. It's a whole new reality. Prices are far higher because the industrial demand is far greater than would be the investment demand in what represents a very small cross section of America. Now, maybe something happens over the next several months leading up to the election, and I hope not, but I have a hard time believing something won't that will wake people up in a way to where they maybe look to silver. And you reignite the investment demand in this country, and well, maybe all bets are off. But I guess what I'm trying to say is that, first of all, to your question, yes, I'm seeing premiums go up on bars. Not so much on the sovereign mint coins yet, but the bars have gone up a bit. I have no proof to say that industrials are buying and melting down bars. I'm not sure where he heard that. I haven't seen it, but I do think all of these things put in context with what Vince has been talking about, what the Chinese are doing, net importing, not exporting, and buying up unrefined silver, because part of the reason they buy up all the concentrate and unrefined silver, it allows them to accumulate tremendous amounts, even if the cost is uneconomical in relation to what the market bears. They don't care because they know where it's going, and they refine it back at home, pulling it out of a supply source that doesn't affect the price. It's not coming off of an exchange, and so no one knows what it's. There is no effect on the ultimate price yet. So, yeah, I think these are the crumbs, if you will, that are laid at our feet. And either you open your eyes and believe it or you don't. That's all there is to it. You can lead a horse to water. As far as I'm concerned, these types of crumbs are very, very, very relevant and very important, because the people at that level are making moves long before it filters on down to, Joe and Jane Six-Pack, who are buying silver eagles or silver rounds and thinking that, all is fine. There's tremendous supply, premiums are low. It's been that way for 6 months. And, you get the little boy who cries wolf over here, me, saying that will end. Well, it's easy for people to poo-poo that and dismiss it as a guy who sells metal. But I'm telling you, as God is my witness, these are the kind of things that I've seen over the last 4 years that have led me to making the calls that I have on things like the BRICS, because you can see them if you pay attention. And these things don't happen in a vacuum.
Consider this. Throughout history, every fiat currency has eventually collapsed. The Roman denarius, the Weimar German mark, the Zimbabwean dollar, all of these currencies eventually became worthless. What remained valuable? Gold and silver. These metals have been used as money for thousands of years because they are durable, divisible, and scarce. They hold intrinsic value, unlike paper money, which only has value because the government says it does. But here's the kicker. While the public is being told that gold and silver are outdated relics, central banks around the world are quietly stockpiling these very assets. They know what's coming. They understand that the current financial system is on borrowed time, and that a revaluation of currencies against gold is inevitable. When that revaluation happens, those who hold gold and silver will see their wealth preserved, while those who hold fiat currencies will see their savings wiped out. We've already seen hints of this shift. Central banks globally have been buying gold at record rates, a trend that has accelerated in recent years. Countries like China and Russia have been particularly aggressive in their accumulation of gold. This isn't just about diversifying reserves. It's about preparing for a post-dollar world where gold could once again play a central role in the global financial system. The situation is dire, and it's not just in the United States. Across Europe, the UK, and other G7 nations, the debt levels are soaring to unsustainable heights. Countries like France are facing a debt-to-GDP ratio of over 110%, and the political landscape is becoming increasingly volatile. In the UK, the new government is trying to convince the public that they will be fiscally responsible, but the reality is that their policies are likely to exacerbate the problem. The bottom line is that we're living on borrowed time. The financial system is so fragile that any significant shock could trigger a collapse, and when that happens, the value of fiat currencies could plummet overnight. Think about what happened in 2008. The financial crisis that year was triggered by a collapse in the housing market, but the underlying issue was excessive debt in a fragile banking system. The government's response was to print more money and bail out the banks, which only postponed the inevitable reckoning. Now, more than a decade later, the system is even more leveraged and the risks are even greater. But there's a way out if you're prepared. As we've seen, central banks are already preparing for the coming crisis by accumulating gold. They understand that when the dollar collapses, gold will be the only asset that retains its value. And it's not just gold. Silver, too, is poised for a major revaluation. Silver is often overlooked in the conversation about precious metals, but it shouldn't be. It's not just an industrial metal. It's a strategic metal that is essential for a wide range of industries, from electronics to solar energy. And while the supply of silver is becoming increasingly constrained, the demand continues to rise. Take a closer look at China's recent activities. China, the world's second largest producer of silver, has recently shifted from being a net exporter to a net importer. This is a significant development that has largely flown under the radar. Why is China suddenly hoarding silver? Because they understand its strategic importance. They're going around the world, especially in Latin America, and buying up unrefined silver at prices much higher than the market rate. They're doing this because they know where the market is heading, and they're positioning themselves to profit from the coming revaluation. But here's the thing. None of this is being reported in the mainstream media. The general public has no idea what's really happening, and by the time they do, it will be too late. This is why it's so important to stay informed and to act now. If you wait until the crisis hits, you'll be scrambling to buy gold and silver at prices that are much higher than they are today. Let's talk about silver's potential a bit more. Silver is often referred to as poor man's gold, but that's a misnomer. Silver has its own unique properties and industrial uses that make it invaluable. For instance, silver is the best conductor of electricity, which makes it essential for the electronics industry. It's also crucial in the production of solar panels, which are becoming increasingly important as the world shifts towards renewable energy. This growing industrial demand, combined with limited supply, sets the stage for a significant increase in silver prices. The premiums on silver bars have already started to rise, and it's only a matter of time before the same happens with gold. But don't wait for the prices to spike before you act. Start accumulating gold and silver now, while you still can. And remember, this is not just about making a profit, it's about preserving your wealth. When the financial system collapses, those who hold gold and silver will be in a position to weather the storm. They'll be able to protect their wealth and even grow it, while those who hold fiat currencies will see their savings evaporate. The signs are all around us. Central banks are buying gold at a record pace. China is hoarding silver. The financial system is teetering on the edge. The time to act is now. It's also worth noting the historical precedent for what we're seeing. In the 1930s, during the Great Depression, the U.S. government confiscated gold from its citizens and then revalued it significantly higher. This was a way to devalue the dollar and reset the financial system. Today, central banks could employ a similar strategy, using gold to back a new global currency system. The recent discussions around central bank digital currencies, CBDCs, further indicate that a major shift could be on the horizon. In conclusion, don't be fooled by the narratives being pushed by the government and the mainstream media. Inflation is not caused by greedy corporations. It's caused by reckless monetary policy. And the solution is not more government intervention, it's real assets like gold and silver.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.